Morning, everybody. So in this video, we'll talk about, the stock market boomed yesterday. It went up about 20% on some of my stocks. Overall, my portfolio went up 10%. And what that tells me was that, there was an opportunity there. Some people missed it. They completely missed the boat. But I think there'll be other opportunities. I think we'll see today the market is coming down some more as tariffs linger. The question of China is still out there. The question of one big beautiful tax bill is out there. So there's still downward pressure on the market, and there'll be great opportunities to do dollar cost averaging week over week over week. Just continue to add to your portfolio, continue to add to your favorite stocks, few $100s at a time. That's perfectly okay. You may, in addition to that, you may also want to save some money on the sidelines to rebuild your supply of gunpowder, for example, because there may be another big dip. You never know with the whiplash effect on the stock market as global trade is readjusted to be America first, for example. Um, you could see another big dip in the stock market. When that happens, nobody knows. And how long will it last? Probably not long, as we saw from this example. So you want to have some money that you continue to put on the side and you're checking your savings account or even a high yield savings account. That would be even better. Um, Ready to go for when the next dip occurs, which, you know, no one can tell you when that's going to happen. It may happen, may not happen. But if it does happen, then you'll be ready to go with your savings. So if you were fortunate enough to take advantage of this current dip in the market, then you saw some stocks and some buying opportunities at 20-25% discount, and then the stock market went up, about 10% overall in an 8-minute time frame. As soon as Trump announced a 90-day pause, within 8 minutes the stock market rose by 10%. And some of my stocks went as high as 20%. So that was just enormous buying opportunity, and hopefully some of you took advantage of that. But if you missed the boat, there'll be other boats out there. You may have to wait a while. It's for this type of buying opportunity. You haven't seen this since spring of, was it 2020 when the pandemic started? So you may have to wait a few years for another type of black swan event to occur. But they do happen. And as a long-term investor, you should prepare for them. And these are great. These are great buying opportunities if you're bullish on the stock market. A lot of people have the opposite approach to buying stocks. They'll buy when everybody else buys. So it's like, well, the stock market's green, so let's buy. But you know, um, the opposite is often true. So when everyone is afraid, of the stock market and they're selling, that's also a good time to buy. So I don't think there's ever a bad time to buy. If you're a long-term investor, you just want to buy. You just want to buy for the next 20, 30 years. So you'll have ups and downs, but on average, they will do dollar cost averaging, and sometimes you'll pay more for a stock, and sometimes you'll pay less for a stock. But when those deep discounts occur, when the stock market takes a downturn, that's definitely a buy opportunity. So I hope some of you capitalized on that, and that's money you can use for a truck payment, money you can use for future maintenance repairs. It's money that you're not going to necessarily touch in the short term, but it's going to have tremendous return on your investment. If you can get 10% or 20% return on your investment, that's better than 0% that you're going to get in your checking account or savings account. Now, you may get as much as 4% in a high yield savings account. And the high yield savings account is not a bad way to go. Especially if you want to protect your portfolio, you may want to put some of your money, like we talked about keeping your gunpowder dry. You want to keep some of your money into a high yield savings account. That way, if an emergency expense comes up, you don't have to touch your portfolio. You have money set aside in a high yield savings account. It's much better to take money out of an account that's earning 4% return on that investment versus a portfolio that's earning you 20% return on that investment. So, the high yield savings account definitely serves a purpose, it serves a role. And you should have about 6 months of expenses saved up into a high yield savings account. That way, you never have to sell your stocks to pay for emergencies. Whatever happens, your portfolio, don't touch your portfolio, let it grow, because you're going to have the benefit of compound interest. Go into that high yield savings account and do that instead. All right, guys, that's all I got for you. Thanks for watching. We'll see you on the internet.